How you doing, traders and traderettes? This is Dr. Greg McLeod from Elite Traders University and My Market Heat app. And welcome to another edition of Bulls versus Bears, the weekly Forex forecast. And we're going to get started. We're going to dive into the markets. We're going to look at all the upcoming news and how it can affect certain currency pairs and the best opportunities for you to make money in this $6.1 trillion a day Forex market. But we're also going to be looking at crypto, the majors, and also looking at indices as well, S&P 500, the NASDAQ 100. So tune in. There's something for everybody. Before we get started, we're going to take a look at some things here. Let me go ahead and share my screen with you. And that way we can go ahead and get started. Okay. And I'm going to share screen. Share screens. Share screen too. Okay. Brought to you by Elite Traders University, and this is what we're all about. We help train people. We help train traders to help them have an elite lifestyle using our elite proprietary pip and run trading method. So you can go to www.elitetradersuniversity.com. And you can actually register for a free masterclass to learn what we're all about. See if it's the right opportunity for you to learn how to trade professionally in the market in 90 days or less. There's also a free ebook that you can also to get a hold of. And you can also subscribe to our free newsletter as well. So make sure you go to elitetradersuniversity.com and take advantage of the free resources to see if mentorship by me is right for you. Okay. Let me go ahead and let's go ahead and view here, view, read mode. All right, there we go. This is the risk disclosure on your screen. Make sure you understand all this associated foreign exchange trading. I'm not recommending any buying or securities. And basically, this is for education purposes only. Okay. Now, I've been doing this for almost 30 years. I'm one of the foremost authorities of short-term day trading called scalping. I worked for Forex Capital Markets as a currency analyst, also IG, also for Daily FX, also for Pepperstone and other brokerages. I graduated from UCLA. I'm not some guy in the ring lights who is just starting a business here. I'm a market Wall Street insider, a professional who knows his craft. You type my name, Dr. Greg McLeod, in the internet, and you'll find that I've been on doing this for a really long time, helping people. And I developed the pip and run Forex scalping system. Okay, so let's go ahead and we're going to look at the dollar index, euro dollar, pound dollar, some economic news and things like that. So let's go ahead and get started. I'm going to use my top secret weapon, my tool that I've developed called the My Market Heat Map. It's an arrangement of currency pairs by percentage change. It's a trade scanner, but it's also a full-featured tool that has all kinds of different applications for helping you trade the market. So one-stop shop is my Swiss Army knife for actually finding winning opportunities in the market. When the market is actually going, we have different color tiles. Green is in an uptrend, red's in a downtrend. But one of the tools I'm going to go to is our economic calendar. So I don't have to go to a whole bunch of different websites. I can look at one website and that's that, right? I can do that. So let's go ahead and take a quick gander at the economic calendar for this week. And to set this up, if you have access to this, we go to looking at actually next week. Click that button to go next week, right? And then we want to look at the high impact items as well. We don't, there's a lot of different news. There's low, medium, and high. I want to stick with the high ones. And then that narrows our scope down. Now, it's really important to get the economic picture of the market. And a lot of people, they just want to trade, press the button and make money. And they fail. Most traders, they make the mistake of not looking at the economic calendar. The economic calendar drives the Forex market. It's the wind. It's the power behind the market. So if you don't know what direction the wind is blowing, you're not going to know where to go, okay? So it's very important for us to look at the economic calendar. And so we want to look at the different announcements, look at the flags. The flags, we call this fun with flags. If you're a Big Bang fan of he has this little show called Fun with Flags, and we're going to have, finances with flags, right? So we're looking at the flags, and that tells us what we need to look at to trade next week, okay? So if we don't see the flag up here, we don't necessarily want to trade that. Now, I'll give you a couple of exceptions to this rule. But the first thing we want to look at is this is a high impact item, and the country is China. And you probably say, well, Greg, we don't trade the Chinese renminbi or the yuan. We don't trade the Chinese currency. So why is this important? It's very important because Australia and New Zealand are two countries whose currency we do trade that are geographically close to China, and they supply a lot of natural resources to the Chinese economy, the second largest economy in the world. And so they consume the natural resources from Australia, whether it's iron ore or copper or for New Zealand. New Zealand is regarded as the breadbasket of Asia, providing milk and meat. In fact, there's more sheep than people in New Zealand, and they provide food for billions of people in Asia. So New Zealand dollar will be very much impacted by whatever the People's Bank of China actually says, or what's going on in their country. In fact, if the Chinese economy catches a cold, then Australia and New Zealand, their economy catches the flu. You're right, because they're neighbors, and there's a very strong neighbor. Okay, so their rate decision is coming up on Sunday, and so usually if they start hiking rates, that will influence the Australian dollar. So at this time, we want to be looking at the Australian dollar and New Zealand dollar as currencies that will be impacted by this news event, either leading up to it or even afterwards, okay? So think of news as this giant rock, and I've used this example before. The rock hits the water creates these reverberations, these ripples, and the currencies are like different little boats floating in this water, and they are affected, right? If they are not affected, then we don't want to trade those currencies, because guess what? We want movement. Yes, we don't want, we don't want to trade in a hurricane. A kite needs wind. A hurricane is too much wind for a kite, but have you ever tried to fly a kite with no wind and you're just running, holding the thing? Well, you can be in a trade that's not moving anywhere, and everyone else's currency is moving, and the one you're in sucks. It's not moving anywhere. It's because there is no news, there's no driving force behind why should this move. Is it moving just because they're trading stuff back and forth? No, they're event driven. And this is an event that's going to drive the Australian dollar, usually, and the New Zealand dollar. Okay, so we want to be looking for that at that's 8:15 Eastern time on Sunday. Okay, the next one comes up on Monday, February 20th. We have the RBA minutes. Minutes are the meeting notes. Okay, so they had their meeting already. They raised interest rates. They had a meeting before. So these are the notes of that meeting. So we actually find out why they actually raised rates and what they're planning to do in the future. Okay, so that's what we want to do. We want to be able to look at those notes, and they're gonna, you don't have to read them or even understand them. Just understand that the Australian dollar is going to be moving on Sunday and Monday. This is the Australian dollar, whether it's Aussie dollar, Aussie yen, Aussie Swiss, pound Aussie, euro Aussie, that whole family, the whole Australian dollar complex will start to move. And you can drill down looking at Australian dollar. But let's say you trade dollar CAD because it's the only currency you trade and it's your favorite currency pair. Well, you're not going to find too many trading movements in the Canadian dollar, except the Australian dollar versus the Canadian dollar, because this news is coming out. Okay, so you say, well, I only trade dollar CAD and I'm really focused on that. Well, guess what? You're not going to have very much to do at this time. So either you look at the right currency or don't trade at all, right? And but I want to trade it because I always trade at this time. Well, it's not going to happen, because this is the party, this is the flag. Match the flag to the currency you trade, and you'll have a higher probability of success. trust me, we've been doing, or just don't trust me, try it, right? You'll see that this will start moving because why? We had news on Sunday, news on Monday. So Australia, that's in play. That's in play, right? So moving on to Tuesday, February 21st, we look at manufacturing PMI from the UK at 4:30 a.m. Eastern time. Okay. And that's, we don't need to know the numbers. They say, well, this side doesn't have the numbers. You really don't need the numbers. You just need to know that this is what the big guys are going to be looking at, and this is what you're going to be looking at too, right? In fact, you might want to look at pound Aussie might be a currency pair worth looking at, or pound Kiwi might be looking not just pound dollar, which is an excellent choice to look at this time, right? So if you're looking at dollar Swiss, I always trade dollar Swiss. It's my favorite currency, and I even named my dog dollar Swiss. It's like, don't do that, because the news is around here. It's moving to Europe. And so this is where the action is going to be, unless you want to trade pound Swiss or pound dollar. That'll be your choice, because this is the news that's going on for the pound or euro pound. So you want to trade something with a pound in it leading up, even after the minutes, and maybe the Australian dollar does its thing. Well, then the next day, move on to the pound. Okay. And then you can look there, because why? There's news going to be there. The manufacturing PMI. PMI stands for Purchasing Manager Index. And really it looks at, it's a survey. They survey people who buy the purchasing managers of companies. It's like, well, if I'm a car company and I need to buy components and things, I feel that I'm going to sell a lot of stuff. I'm going to purchase a lot of stuff. And they'll ask me, are you purchasing anything? No, I think the recession is coming, so I'm not going to purchase as much. So a bullish purchasing manager index would be good for the currency, right? And a bad one would be, not good for the currency short term, right? Now, the pound has been in a downtrend, but we'll look at that. So, any pop that we have might be something worth selling, or looking at maybe a short-term trade in the opposite direction. Okay, but we'll talk about that in technicals. We'll go over the technical picture after we cover these. Okay, now 8:30 is gonna be really easy on that Tuesday. It's a Canadian look. The maple leaf flag right there. Oh, Canada, 8:30 a.m. Eastern time. That's our news cycle. We're in our North American news cycle. It's when we get news out of New York and news out of Canada. These countries, they have an 8:30 announcement and a 10 o'clock announcement, usually that news cycle. But we're going to have CPI out of Canada and retail sales month on month. MOM doesn't stand for mom, but it stands for month on month. Okay. Month on month. Okay. And then, so month on month retail sales and consumer price index, that's our CPI. This stands for inflation. Consumer price index is going to be a measurement of Canadian inflation. High inflation usually means that the currency is going to, that the central banks, the Bank of Canada, will have to raise interest rates in order to lower inflation. Okay, that's what they do. So that's why we have higher inflation, like in the US, we had higher inflation, the dollar started to rally. If the dollar rallies and interest rates go up, it makes the cost of goods actually go up. So it's like, wow, they're fighting higher prices with higher prices. Doesn't make any sense, right? So you want to be able to do that, right? To look at the CPI. Now, it's higher than expected. We could see the Canadian dollar rally, and we want to look at dollar CAD, the Canadian dollar versus Japanese yen, Canadian dollar versus the Swiss franc. We can look at the whole Canadian dollar complex will move. Now, we also have kind of oil kind of falling, breaking out of we'll talk about oil because it's highly leveraged. Canada is one of the top 3 producers of oil and exports to the United States. You think it's just Middle Eastern countries? Well, no, Canada, our neighbor to the north, supplies us with quite a bit of oil. And so when oil prices are going down, it means that the demand need for the Canadian dollar goes down as well. So they're highly connected to oil. So we could check that as well. And in fact, I'm going to be appearing doing a Las Vegas Forex Mansion Mastermind. That's going to be happening in April. And I would love for you to join. In fact, I'm going to be talking about cross-currency correlations and things like that. We're almost sold out. I mean, the amount of interest has been fantastic. And I want to congratulate all you guys who did reserve your seat. And we have a few seats left. I'm going to be teaching on currency correlations, how to trade other things. Like if you want to trade S&P 500, there are currencies that you can trade that match the S&P 500 or match the NASDAQ. You can trade currencies that actually match the oil or gold or silver. There's these different correlations. We'll talk about that. We'll also talk about how to scale a large account or small account. If you have a small account, you're trading with something in like 50, I took $50 and took it to like almost $10,000. So I'm going to be teaching that as well. So even that in itself is worth a great deal. Plus there's some early bird bonuses still available if you want to jump on those, including my supply and demand zones taught by a $100 million hedge fund guy to me. And I actually was able to re-record that and make that available. Also, my advanced trendline course, a $1,475 value, that's going to be given away as well. And so it's going to be food and fun. There's going to be Top Golf. There's going to be food 3 days. We're going to be doing a special London session, VIP session, where we're going to be trading at night, at midnight together. And so that's, get your spots right now because they are going fast. But I'm going to be teaching about that cross-currency correlations and things and how we can use currencies to trade other things. Okay. So that's what we're going to be looking at. So that is Bank of Canada that's going to be on the 21st. And not only that, we have a rate announcement. Central bank alert, ring, 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 ring. Okay, we're going to have the Reserve Bank of New Zealand. They're going to have their interest rate announcement at 8 p.m. So that's going to be really good for the New Zealand dollar. The previous rate was like 4.25%. Is why they expected that they'll raise 25 basis points to 4.5%. And then they're going to have a monetary policy statement. So they're actually going to tell us why they came up with that number, whatever that number is. And then there's a press conference where they're going to be answering questions. So during that time from 8 p.m. to like 9, you're going to have a lot of volatility in the New Zealand dollar. So you want to look at the New Zealand dollar as your currency of choice for trading. So people say, well, don't trade the news, it's dangerous. Well, you can wait an hour afterwards or leading up into that, right? Because these guys are not waiting to the last minute to jump in these currencies. You're going to see them taking positions in the currency ahead of time. And that's it. So if you can't, lost my train of thought of this alarm, right? So you want to be able to look at these currencies. If you can't trade the announcement because you don't have the predictive function, we use something called the predictive function to be able to forecast price and to get into to things way beforehand. And so that helps us out quite a bit. So when we can get into our different trades. In fact, we had one on the it was the pound versus here's the pound kiwi. Pound kiwi was of interest, and we're able to take a trade, and we're able to get out at a pretty substantial move from this spot. Now the spreads are really wide. We got long here, and the entry was, we entered here but got filled here because the spread was so wide, but still made money on the trade because we have really long wick event right here. So when we got in on it, the spread was high, but we still made up for it because when pound kiwi moves, it can move. And I'll talk more about this in technicals. We were able to still net out a pretty big 29 pip profit on this currency. Okay, so the New Zealand dollar has been weakening going into this announcement. So it could be something where we'll talk about maybe a pop and drop. but that's going to be big. And then finally on Thursday, we have the growth GDP out of the US. That's going to be 8:30 a.m. Eastern time, right along with the what we have is the 8:30 a.m. news cycle. I haven't seen too many 10 o'clock announcements like they used to, so I don't know if they're kind of like lighting up on those. But when I'm looking at trading the US economic announcements, I look at the US dollar, dollar Swiss, dollar yen, dollar CAD, and then I'll also look at the euro, because the euro is called the anti-dollar. Okay, so even though the European flag is not here, it'll trade the euro, because usually what's good for the dollar is bad for the euro, and what's bad for the euro is good for the dollar. And that's kind of this counterbalance as the euro being called the anti-dollar. Okay, they're not equal. They are used as a way for, for very rich people and hedge funds and things to mitigate their risk. If the U.S. economy goes bad, then the European economy benefits, and if the European economy goes bad, then so you'll have movements, these capital flows between the euro and the dollar based on this economic news. So it's a very almost a binary event. Okay, so that's the news. Again, we're going to look at we're not going to use the Chinese renminbi because we don't trade that. You may do so, but the spreads are wide, and the required margin is high as well. So instead, we trade the Australian dollar and the New Zealand dollar, and then we have also RBA minutes. So we're going to use Australia again. We're going to look at the British pound for the PMI and the British pound currencies complex. We're going to look at the Canadian dollar. We're going to look at the New Zealand dollar, and we're going to look at the euro and the dollar pairs, dollar Swiss, dollar CAD, and maybe the dollar yen. It really depends. Dollar yen, it does its own thing. I wouldn't dollar Swiss, dollar CAD probably better. Euro's definitely one that I would look at 8:30. So even though I don't see the euro flag here, is not European news, but since the euro's position as the anti-dollar is so ingrained and so prevalent, then whatever news comes up that's either positive or negative for the US economy, it's either going to take down the euro or rally it higher. Okay, so let's go ahead and go into the charts. Let's get to the charts. Yeah, Greg, let's get out of here. I want to see some charts. Okay, all right, let's get some charts. We'll get some chart action, and hopefully you'll be able to see that. And let me go ahead and remove my stuff here. Remove my drawings. Remove. Okay, so we've got. All right. So we're in the US dollar. We're going to start off a daily chart. And even though most of the people who follow me are short-term traders, scalpers, and you say, well, Greg, why do we look at these big wide time frames for? Because we want to have the 50,000 foot view, right? I can stand on top of here and I can get an idea of where we are, being able. That's why the whole thing of the balloons and satellites and things, right? Having the high ground has always been important in warfare. Either you're able to take a mountain or take a peak or take a hill, the bunker hill, everything's battle the hills, right? Because why? Because you have an elevated view and you can see the terrain. But if you're on your phone in this section, you don't know if this is an uptrend or this is just a retracement. So that's why we have something called time relevancy error that many traders experience, why they take losses, because they're looking at too small a time frame and they don't get the overall context or the big picture, right? So we want that satellite view, overall 50,000 foot view, right? Because when we have that, then we know ahead of time what's going on. It's almost like having a crystal ball, right? So you can see that we had these lows here in the dollar. This is the US dollar index. The symbol is DXY that you can find on TradingView. And you can see that our low, we were in the 89.40 area back in 2021, where we look at where it went, where it came from, where it last, and where it is currently, right? And we're sitting right here at the be bounced off this area, and there's a Fibonacci relationship as well. We can take a Fibonacci, and I have videos on how to trade Fibonacci as well, right there, right? And if you are interested, in booking a call with a member of my team, we're also giving away access to the freshman Forex foundation course, the power course, and we'll give you access to the first 9 lessons as a way of our gift to you, to get you a sample of how I teach, and also to encourage you to spend time with our enrollment consultant, showing up. The only way you can get access to the course is to actually book a time, show up, and participate, and let us see if we can help you or not. And it may not be right for you. Not everyone we talk to gets in. In fact, very fewer than 1 out of 10 people that talk to us we allow into the program. So, but you'll at least get some free training that will help you in your trading. So when you book your time and you also confirm your appointment with our enrollment specialists, and after the call, ask them for the free Forex Foundation level 1 course, and that will give you access to our training, my training that I personally did. Okay, so here is our US dollar index. We pull back to a fib level, the 50% Fibonacci. We can see that we touched it several times, 1, 2, 3 times a lady. We bounced off this area, right? And then we rallied from there, and we've been in an uptrend for the past 3 weeks. Look, 1, 2, this is a weekly chart. So when I talked about this last week, what did I say? I said the dollar is in an uptrend. So why is this important? Is because once we understand where the dollar index is going, we know where 7 currencies and their direction are going from looking at one currency pair. That's the power of looking at the dollar index. So now it's like, we are not getting long euro. We're not getting long Aussie dollar. We're not getting long any of those major currency pairs. We're getting long dollar Swiss, dollar CAD, dollar yen are all rallying as why DXY is a basket of currencies versus the US dollar. And right now, the dollar is kicking butt week after week. Green, 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 green. Green is bullish, right? And so we're in an uptrend, on a weekly uptrend. Now, these wicks, they represent some pullbacks, but they didn't last very long. So yeah, you could have made some money scalping down. So you said, well, Greg, I'm a scalper. I can't enter on a weekly chart. Well, now that we've got some support and resistance all set up here on the higher time frames, what we can do is drop down into micro world. In fact, what I'm going to do, I'm going to put my Ant-Man mask on. That was a great movie. I saw Ant-Man the other day with the Wasp, and boy, that guy Kane, he's a really cool bad guy. If you like bad guys, Kane is awesome. So I encourage you. So we're going to get down into a lower time frame, Ant-Man, and there we go. So now we've got our rally up in there, and we can go even lower into smaller time frames. We walk the time frames from up to down to get in this Ant-Man mode, right? Go from the 1 day down to the 4-hour chart. And then now we're seeing our entry. Look how our razor sharp our entry would have been. We've been in this uptrend, right? And we got a little bit of a pullback. We can get lower time frame, go down to an hour to even refine that. And we find all types of trading opportunities here in the 1 hour time frame. When we had pullbacks here, yeah, there were times we could have gotten short, times we've gotten long time. But look, we are rallying against this 200 moving average and moving higher. Let's get lower time frame. Let's go down in the micro world, go down into the 30-minute chart, right? Half of a dollar chart. And you can see even more gradation, but still the overall market tide is up because guess what? The higher time frame is the current that we're following. Let's get down even lower time frame, go down and smaller, get smaller. Let's go down to a 15-minute chart, go half of that. And you can see that we have trend line breaks below the 200, right? And then consolidation here on the 15-minute, right? But the tendency is up. So we, going down even lower time frame to a 5-minute chart. And now we get kind of, lots of gradation there. We got this really long rectangle, this this support area, right? Our bias, now you wouldn't have any bias if you started here. If you started on micro world and the ant world, you don't know what's going on, right? But you don't understand what the higher time frames are doing unless you get large, like Ant-Man did in the movie. Too bad he dies. No, I didn't, spoiler alert. Anyway, let's drop even lower to a 1 minute chart, right? And we can go even on certain platforms like CTrader, we can go down into tick charts. We can go inside of these, and there's trading opportunities all in here where we can use that. And in fact, I'm going to actually show you a hack for getting access to a CTrader while living in the US, only for those people who are either in our stream, who subscribe, who are going to be in Las Vegas. Either being in the room is very important, right? Well, let's take my mask off, right? That's my Ant-Man. So now we're down inside here, right? And you might say, wow, we went from 103.97 to 103.84. That's about 13 pips, right? It looks huge, right? And there's money to be made. But guess what? When this starts to break higher, you're gonna have that weekly trend is already pushing this up. The current is starting to pull this higher, right? And so drilling down from the weekly, even going higher to the monthly and walking your way down, you do that for every trade that you do. Walk it down. And that way you get a perspective, like, because right now you're saying, oh, well, this is a downtrend, look, lower highs and lower lows, I'm looking at structure, blah, 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 right? However, the higher time frames are telling you that this is something that's going to move higher. And so we need to actually to look at look at actually look for an entry to get long. In fact, you can see that in when prices start breaking these moving averages and start moving higher, you'll see more green candles and red candles, right? So right now we're under the influence of the 5 minute chart. So anyway, that was a free lesson there. I threw in there into bulls versus bears. But let's get back to the analysis. We were looking at the Australian. Let's look at the euro, since we're looking at the anti-dollar. Let's look at EU or USD. It's the euro versus the US dollar. And if you're looking at currencies for the very first time, Forex is a little bit confusing. We don't trade, we're not buying euros and holding euros or buying dollars. We're looking at the relative value over each. And basically, one is stronger than the other. This is like a boxing match between Pacquiao and Bradley. You put them in the ring, and one of them is going to be stronger than the other. We want to bet on the stronger one, right? So that's our goal. So if we click the US dollar versus the euro versus the US dollar, and walk our way out, we start at the higher time frame, and we want to maybe even go even higher. Go out to a weekly. And now we're trading off the weekly. We have to have big stops, and nothing really happens there. But there's all kinds of things that are going on here. In fact, we have an old level of support on the weekly, and we've just bounced off that, rallied up, and we have pulled back down to this level of support, right? We can do that. We can actually get rid of all these lines and just put a simple Fibonacci on it, taking this swing here, and we can get a major look at support and resistance that we can draw very quickly. And we can see that price rallied up to this 50% retracement and pop back, and we're sitting right on the 38, right? So we're sitting on this 38 retracement, and we might get a bounce from here. We got to look for a bounce or a break at the 106.94, right? We do have a short-term, on the weekly chart, we do have a really short-term, we have a counter trend rally against this overall downtrend, which is pretty interesting, right? So we can drop down to a daily, walk it down, and you can see that we have been rallying, right? And we rallied right back to this line that if we just took these 2 points and projected them into the future, right? If I just go to settings, and we can just project, extend to the right. And you can see that just putting these 2 points and projecting into the future, that there's some contact looking here, right here. there's some there is support. We have a Fibonacci. We have some support here. So maybe price comes down here on Monday, a drop, yeah, right? Or we might even see some type of a pop and then a drop down to this level, right? Because we're in a trend channel. We were to like copy this and clone it like a sheep, and then put this on top like that. So we have a range. This was a range that was moving sideways, and now it's angled up. And so we're looking for bounces from the support and moves to the upside, right? But right now we're just kind of sitting here on this support area. So we might get some type of a little bit of a bounce higher. We're on a daily, walk it down to a 4-hour chart, just walk it down. And then we walked it down, and we can see, look, there is a little bit of a rally, right? Now, this rally, we want to watch that low, 106.12. 106.12 breaks, we could see this thing move fast to the downside, because this was an area where buyers stepped in. Buyers stepped in here, and then buyers stepped in here, right? They stepped in on the, they saw the Fibonacci area, and we're at the top of an old range. So we might get a little bit of a bounce back up to 107.79 or so, right? That's a 4-hour chart. And the 4-hour charts are known as dealer charts, because the dealers are looking at these 4-hour charts to determine how they're going to screw everybody, right? Where their stops and limits are located. They know there's stops there. They hit that, then they're going to get liquidity down here to 105.51. And, there's a spike high at 108, the whole number, round number resistance at the 108 area and the 200 there. So any of the bulls are pushing it there, they probably, pull their chain up to that point and then spike them out there as well. So you want to look at this area. Now we can even drill on down to that 1-hour chart. And you can see that we're hitting the 200 simple moving average on the 1-hour chart. Not there yet, but every time this thing has hit this 200 simple moving average, price has trended down. So we've got this downward trend channel. So bulls versus bear, the euro, I'm constructively bearish on. We probably won't see any action until the U.S. as we get closer to the U.S. news coming out, right? Now, so that's and then we can go and just drill down. You can see, hey, look, we're kind of topping out here. Rally. Oh, going flat. I'm so tired. I'm tired of going up, and then usually price goes up, bulls over, and then we come back down in this pattern, right? So you want to look for triggers, and that's where when you're in the Las Vegas mastermind, we're going to talk about trade triggers. What will get you into the market? What are you looking at? What are the things? What are the clues? You want to build a case, almost like a court case, like the OJ case. They said, well, if the glove doesn't fit, you must acquit. If you're for fingerprints, you're going to look at for, fingerprints, tire tracks, pieces of clothing, pieces of hair, forensics. You guys watch all those CSI, blah, blah, blah TV shows. It's, they get all these clues to build a case to find this guy, right? So we're building the clues to see if this is a bull or a bear move, right? So we're looking at oscillators. We're looking at trend line breaks. We're looking at old levels of support and resistance. We're looking at candlestick patterns. We're building a case. Not one piece of evidence is enough to convict us to take a trade, either bullish or bearish, but we're building a solid case based on objective data, right? Not, I feel that's going to go down because your friend told you that, but it's because you have solid evidence, okay? And we can't go over that. That's where mentorship comes in. But you want to build a case, and when you can build a case of 4 or 5 things, well, then you pull the trigger on the trade, right? But most people don't have a trading plan. And remember, if you don't have a plan, you plan to fail. If you fail to plan, okay? So we're looking at the euro, looking at these levels. We're looking at this 3 drives to a top, and we close above the whole number, round number 107 area, well, then we could see a possible move higher. We are, consolidating ahead of the week. And so that's what you want to look for. Okay. Let's look at the Australian dollar, because that's where we have the Bank of China news coming out, also the RBA minutes. And so we'll see if we can see some tracks in the sand, and almost, they look the same, right? Because remember, I told you, if you look at the dollar, you can find where these guys are going, right? And I think we got some old stuff here. Let's remove our drawings and start from scratch here, right? So we jump out to the weekly chart, and you can see that, we have been made, and the structured people, you see lower highs and lower lows, and you've got some type of a trend channel going on, right? If you connect those 2 points there, extend them into the future, and if you connect that, right, we have this downward trend channel, right? And then what happened was we got a little ahead of ourselves. It broke so hard, came back into the channel and formed a new channel, right? So you've got these, I have a friend, Striker, who does really good things with the trend lines here. So there's so we've got this another channel, right? More channels in cable, right? So we had a trend channel there. We broke it. We broke it with one candle, and we're sitting against the 200. So this is a very kind of like a crossroads. We can see that, if buyers are stepping here at the 68.76 area, that we could continue this channel higher. We probably into some type of oversold area, and we might see some type of a bounce, right, from these weekly trend lines. Let's go down to the daily, and you can see, look, we were bearish, strong bearish, but this last candle here on the daily, not so much bearish strength. The bears are kind of like crawling back in their cave, and we may be set up for a bullish move higher to, we broke below this trend line. And usually when price breaks a trend line, it comes back to retest the trend line, right? We call that RTTSE, or return to the scene of the crime. So the criminal broke out, and they probably returned back. And why you return to the scene of the crime, I don't know. That's why they're criminals. I don't know. Whole number, round number here is at the 700 area of the figure. We're at 68.77, which is near a banker's level of 68.75. And we got as low as 67.93. So we bounced off this 200 moving average on the daily. So this actually looks slightly bullish, and we may be setting up for this rate increase, or the rate of the People's Bank of China rate announcement, and the RBA minutes that are already, these guys already know. Yeah, and this is like Clarence Beaks in Trading Places, okay? And that is going on. You think, oh, there's just a movie, it's just a movie. No, someone's got the envelope. Someone has read the minutes. People have already got, their friends already got in, Blue Horseshoe already knows about Anacott Steel, okay? You have to understand that when you pay a certain amount of money, you can get access to news and events way before, and also the systemic risk of something weird being released and tanking the market, that everyone has to be aware. Even the big players have to be aware of this stuff. They can't just wait till the last minute. It's not fair because we don't hear about it until the actual release, but this stuff has already been circulated, already been printed. Think about it. They have to print the minutes. They have to circulate them. The guys have to read them and be prepared. So this stuff is already in circulation. And, they have interns and people with cell phones. They take pictures of stuff and send stuff out. And there's these whisper numbers. So you got to know that at the end of the day, on Friday, someone said, the rate increase is going to be this, and we're really hawkish about inflation. So, and we're positioning ourselves with the Aussie dollar potentially getting long. I'm making this up. I didn't hear it. Okay. So don't call me, hey, Greg has a direct connection to the RBA. It's like, no, but my trading looks like I do. You look at my videos and you see I pull the trigger on stuff before they release it. And because they leave footprints in the sand, and I teach you how to read those footprints. So you're not, even Gordon Gekko said, war, famine, peace, the price of a paper clip, we pull a rabbit out of the hat and people go, wow, right? Because they already know, right? Assume that Clarence Beeks has the crop report. And if you have the right system, you're able to read what's going to happen before it happens, right? So it's like having your own crystal ball. It's my unfair advantage. And that's why I charge a premium for it, right? It's not free, I'm sorry. I didn't work 20 years figuring it out in order to give away for free, but it's worth the investment. In fact, you'll make a lot more money than I'll ever charge you. Okay. Let's drill on down. Daily, let's go down to 4 hour. And we can see, look, there's our movement right there. And we got a really powerful pattern there. And if you're in mentorship, you know what that is, right? And then there we go. We have we drill on down. And then see, now you've got support, you got trend line breaks, there's all kinds of things going on here, which indicates that we're going to possibly get a higher move in the Australian dollar, right? And then we can also look at the New Zealand dollar as well. And they actually have a rate announcement coming up this week. And they're probably already situating themselves for, let me remove all this, remove the drawings, leave the indicators, right? And similar, look at that hammer. So they have a rate announcement coming up, and you think they know what's going to happen next, where this is a full-bodied red candle, a full-bodied sell candle, right? Full body, sell, right? Sell, Mortimer, sell, right? Full body red candle, make this all red, right? The buyer stepped in and pushed price up, leaving a wick. That what creates the wick. So it started off here, and then so it opened up here, price dropped, buyers stepped in, bought the bargain discount, the 200s of moving average, price went up, went smack down, rejected, boom, left that box, right? And so the next candle we get a break above the high of that candle. I'm gonna move this out of the way. Right, so we have a hammer, which is a bullish reversal candlestick pattern, and we get a break above 62.56, and we get a green candle above that. That will be a sign of confirmation of this reversal, right? Right, because we have a bullish candle, and we have a formation of what we call a morning star pattern, a morning star reversal candlestick pattern. Steve Neeson brought candlesticks to the U.S. and to the West back in 1994 because he saw the Japanese traders were just crushing the market and making all kinds of money, and the U.S. traders were not doing so well. But then he brought candlesticks in 94. So you look at charts and things before 1994, we use bar charts. And so we get this reversal candlestick pattern here. And we can continue with the price probably come up, and there's old resistance there, 63.89. This is a giant gap down candle, right? Big gap down, bullish, bearish flag, breakout from the flag. But now we'll probably see a retest of 63.95 and a filling of this gap. Price basically opened here and closed here straight down. Usually these vertical candles are gaps because Forex charts are indicative. They're not like stock charts or commodities charts where there's a buyer and there's a seller, there's a record and an exchange. We know the buyer and seller. We know exactly what was traded at this price. In the Forex, since it's decentralized, we don't know if this was a price at the airport that was made, or was a central bank, or was it a company doing payroll, or maybe it was a credit card transaction, okay? All those are currency transactions. We just know that price was here and they basically take a crayon and they color it in, and that's why it's indicative pricing. So if you got long here and you had a stop right there and you got slipped because there was no one there to take the other side of your price until here, that's what slippage is, because there was maybe no one at the brokerage was going to buy it from you, buy your stop at this price. So he's, oh, the broker cheated me. He's like, they didn't have anybody at that. There was no one in that seat, and no one was going to take it from you until it got down here, right? Which is an old level of support, and some buyers stepped in here, right? In fact, this is your demand. Why is it a demand zone? Because we had this, basically no one was here, and then now buyers are already here taking it. And so that's why we can look confidently to say, that we would take this north. The structure people would say lower swing highs and lower swing lows. This is a downtrend. It should continue. It's like, wrong. How many people have followed that mess and lost money, right? I don't mean to call it mess or be disrespectful, but you're using if your thinking tells you that this is going down, then you're going to lose money, right? Just because you see red candles moving down and you think, therefore, it's going down, but really it's going up. Your ability to be able to see what's unconventional and being able to see what is counterintuitive, that's what counterintuitive means. Intuition tells you this is a downtrend. Counterintuitive tells you, this is what Elliott calls an ending diagonal. It's something that's going to reverse, even though it's like, there's nothing here that's telling me I'm seeing big red candles, Greg. I'm seeing this downtrend. I'm going to sell it. Well, thank you for selling, because I'm going to take the other side of your trade and take your money. Okay. Either you're going to trade the way the market wants you to trade, which is in the right direction, or you're going to continually give your money to the market. So either pay the market or pay me for learning how to see the things the way market makers see things. Okay. So New Zealand dollar already positioning itself for a push higher, right? In fact, what they want to do is they lure everyone to the south side so they can take it north, and they'll take it north and fill this gap. This is a gap. Think of any vertical sell that much of a range is a gap. And so we look for the gap to be filled to that area, right? So if you look at this as a risk reward trade, you say, okay, Greg, what would be my risk reward, right? Not saying that the trend is reversing because the dollar is very strong, but in a news event, we may see, our risk can be here and our take profit can be here. So basically we got a 2.29 to 1 risk reward ratio for this trade on the New Zealand dollar. Okay, that's a possible setup. Okay, so we looked at the New Zealand dollar. Let's look at the S&P 500, and I think we looked at all the Canadian dollar. That's what's going on. USD CAD, and really we can look at the Canadian dollar index, right? CADWCO. Okay, this is a Canadian dollar world currency unit. I want to thank Jamie Cut the Rope for showing me about these. He says I taught him and I forgot, and so he reminded me. So this is a Canadian dollar world currency unit. It's just the Canadian dollar by itself, right? And we can actually go out to, do the same thing, walk out to a weekly, and then take a look, see what's going on. What's going on? Not a lot going on. It's kind of like it's been moving, we draw this broad trend lines, this broad, we went down, right? And then we broke higher. We got this, higher one. So we've been kind of going up, but it's, kind of corrective. I mean, it's kind of winding up and down, and the waves are kind of like crossing each other. It's really messy. It's like you can maybe draw like an estimate of some type of a channel, and we hit the top of this channel, and the bottom of the channel is here, right? Which would mean Canadian dollar weakness, right? If we came back and retested the bottom of the channel, but we did. We have like a midpoint in this, and that's why if you look at something called Andrew's pitchfork, that'll probably be like an Andrew's pitchfork, where the median between the range is this line, and we can see that there's price action breaking through here. So this is not a trend line, because trend lines focus on swing points. This is just a line. This will show like a median line, where this is splitting the difference. This is the high price. Hey, I'll pay you $100 for it. No, or someone says, I'll pay you 50 for it. Now I want 100. No, I'm paying you 50. I want 100. Okay, let's split the difference. Okay, so let's do 75. $75. Okay, this is splitting the difference between the highest price and the lowest price. And this is like the typical price, the average price. So right now we're sitting on the average. Why? Because we got news coming out. But we did like a double top at the top of the range, and we haven't hit the bottom of the range. So maybe we see, even though Canada may, we might see some inflation data, maybe it's not as bad as it is, and we could see a move lower, right? And that would make the US dollar CAD go higher. It would make the other currencies, Aussie CAD, go higher as well. And we can look at those too. You could also see CAD yen actually go down, right? So, I mean, we are, we're rallying against the downtrend there. There was like a little bit of anytime you see a spike high and a spike low, you can put a fib on it. You can see like we rallied up to a 23% retracement. And if we broke below this row of like little, we broke below that trend line, we could see confirmation of this move, right? And we have, you go back to structure, structure works sometimes. A lower high, a lower low, a lower high, a lower low, a lower high. Well, the lower low is what we would be expecting, right? So this is the Canadian dollar. We can walk it down to a daily. And you can see that. So we did rally off the bottom. And we're just, maybe we see some, we had a high and we're pulling back, right? We broke out. We're still in a range. If we broke above this area, we could probably get to the 200, right? I actually don't want to walk down into this because we don't trade this. This is what we trade. We trade USD CAD or CAD yen. We trade a currency pair, right? So let me remove all these drawings here. And you can see this is dollar CAD. This is the US dollar versus the Canadian dollar. And we can see clearly on this daily that we have lots of support where Canadian dollar tried to get strong versus the US dollar. And this couldn't break this 132.43 area. We could back it out to a weekly, right? And you can see that we have basically a flag pattern that this thing is going to take off, that the Canadian dollar is going to get whooped by the US dollar, right? We have a flag pattern. As long as we can stay above 32.43, but we break 35.32, this thing has a ways to run, and it can run back up to the old high that we had in the dollar CAD exchange rate, 39.82. So I'm bullish versus bearish. I am bearish Canadian dollar, bullish the US dollar versus the Canadian dollar, right? We could see something happening there, with the support and this kind of a takeoff here above the 200. This thing looks like it's ready to go up. Now, but let's look at CAD JPY and have CAD in the driver's seat and see what we got there, right? And this is pretty interesting too, because we did, now we're on the other side of trend. This was our trend line. The Canadian dollar was doing very well, right? And now we're on the other side, and now we're forming a downtrend, right? And we actually broke that one. We can't really draw unless we have another candle. We can't really connect that high. Basically, we broke here, right? And we're rallying. So, and we could be 1, 2, 3, 4, and then we can keep moving lower from here. We would need some confirmation. We would need to see a break of a trend line, right? That's a weekly, but let's walk it down, go down the Ant-Man world, okay? Still, we have we have sideways consolidation, right? And what you want is you want to find the currency. Like, we know the dollar is strong, right? Dollars are strong right? So we want to put something weak next to the dollar, right? And if we do that, then we have something, very, very powerful that we can do. We can compare strong versus weak, and we can see, okay, if I put the US dollar versus the Canadian dollar together on maybe a 4-hour comparison, then we can have, we can see what that is, and see if I can find CAS 3 US dollar is set, will be a 7 on the strength meter. USD CAD, yeah. So if I were able to put this, I have this strength meter here for currency strength, strong weak analyzer. And that's another thing, a special gift for those who will be coming to the Las Vegas webinar is I'm going to give a lot of the private tools which I have access to. I'm also going to give those suite of tools to the VIPs that sign up for the Las Vegas mastermind, like this Forex strength meter. And you can see dollar in the driver's seat, +7. CAD, not so strong, 3. You pair a 7 and a 3 together, and guess what? You get dollar CAD, and you get strong, means an uptrend, stronger uptrend, right? So, if we pair a CAD and yen, well, you can see it's a -7. The yen is pretty weak, right? 3 versus a +3 versus a -7, when CAD yen is, would be strong to the upside, right? So you want to pair a strong currency with a weak one. And if we were pairing CAD, we want to pair maybe CAD Swiss short. We want to pair it maybe Euro CAD short, might be good. Aussie CAD short would be good too, right? And if we had pound CAD, it would be kind of neutral, -3 and 3. That's 0, means it's going to move sideways. But we wanted to pair this off. So these are that's a tool that we use that can really help us out when we do that. Okay. All right. So that's the Canadian dollar. That news is coming up. And we want to be able to look for it. Look at your economic calendar to get the exact date and time. And what you can do is set alarms, set some reminders in your Google Calendar, on TradingView, to remind you to take a look at those currencies at those times. Okay, so you can manage your clock, manage your calendar, get your calendar out and write on your calendar news coming up at this time. Make that your priority to track the news, because the news you can't lose without the news, right? If you know how to use it, right? Let's go ahead and get to SPX 500. We'll take a look at the S&P 500 index, and we've been hanging around, right? This is a weekly, and it's we've been moving. We haven't really gone anywhere in about a year, right? We've been hanging around since. We're just basically we had a low of 30.49. Buyers stepped in. We had a high of 43.27 back in September, and then we have some resistance right here in this 41.83 area, and we're just kind of like trucking around, trucking along here. We've got a rising trend line there. If we can't break, because as we get closer and closer in this triangle, we're going to see a breakout. We'll either see a breakout to 43.27, or we break down to this old support area that we had back on December 19, 2022, 37.59, right? So we've got this, we're moving sideways. So if you are trading this, and you're saying, and you're not making any money, or you're winning some, losing some, this is why you're stuck in a really tight range here. And this is on a weekly, but if you go down lower into smaller time frames, you might find some opportunity. This is the daily, right? And it actually is not very difficult to trade if you're not too greedy. The key is not being greedy. I'm going to be talking about greed in the Facebook group. So you go down to a 4-hour chart, and you got a really well-defined range there where we're bouncing off the range. We're kind of oversold, and so we're basically, range traders. They're buying supports. This is like Pong. Remember the old Atari Pong game? Boom, 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 boom. So we're just buying support, selling resistance. Because what happens is people get all excited. Oh yeah, this thing is going to go to 4,400, and they buy FOMO, and then boom, right? And then the bears come in. Yeah, this thing is going to go down, and boom, it goes up, right? And then back and forth, back and forth. But the key is not get overly bearish or overly bullish. You see here, we're below some key levels of support right here. And maybe we go a little bit lower. There's a 200 sitting right there. But we are sitting in support, 4,100. We bounce, right? The key is if we bounce on Monday higher, this thing is probably going to collapse really bad, right? We want to see, usually whatever Monday is, the rest of the week will do the opposite. So if Monday's up, then usually the rest of the week is down. If Monday is down, which would be a good thing, then look for risk-on rallies for the rest of the week. So very interesting to see what the S&P 500 does for Monday going into Tuesday. If it's a down day, which is hopefully it'll be down, it doesn't really matter for me, but I know people who are long only and they don't make any money unless they're buying tap short because their account's too small. So it really doesn't matter up or down. But the overall bias of this thing going back for months, this thing it's an uptrend, right? We're in an uptrend. And this is where we are, right? I'm going to move all drawings. We are in an uptrend. But right now it's seasonally, this is like the worst month for the S&P 500, February. And February is not turning out too bad, but normally if you go back for like the past 72 years or so, if you look back to a cycle, it goes back 72 years. If you go back 72 years, there's a cycle where we have where prices have basically just gone nowhere to negative in February, right? February usually are, and see, I go looking at these cycles. There we go. Yeah, so usually February we're like 0.04%. March usually is a very good month, and April is a really good month. Then what's selling may go away. So this is a seasonal pattern that goes back from 1950 to 2012, and it's actually carried out, along this other, here. Let's see, there's the best 6 months in the market. So the best 6 months usually is 7.5%, the worst 6 months 0.3%. And this means that if you're long Aussie dollar, long NASDAQ, the risk on currencies. I mean, you can make money in either direction, but this is like long only, right? When we talk in terms of being good or bad, right? Okay. All right, so we are. Okay. Move back here. Back. Okay. So this is their S&P 500, and it's an uptrend. So if you bet against this bull market, you will lose money, because the tendency for the past forever has been up, right? I mean, this thing only goes back so far, but we're in an uptrend and we're pulling back. So if you had an S&P fund, I mean, let's think, when this thing pulled back, people were probably, oh my God, the S&P is down, blah, 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 blah. And then boom, it broke out, right? And so these areas where we pull back like that represent areas of value that if you were to get into an S&P fund and just kick back, and I'm not a buy and hold person, but if you were buying and holding, like right now you're young and you pile into some of the S&P index right now, and we look back to the old high of 4860, right? Because that's what happened. We dropped from the high and then we rallied back up and then kept going. So we look for maybe 5,000 going into 2024, right? As long as, we don't break 3571. If we break that, then, something's going on. Meteor is going to hit the earth or something. But but we are in a pullback, a very good area to accumulate for the long term, for the next few years. So don't, if you're not a short-term trader, and like here, in fact, this is the long-term NASDAQ, right? We are overall in an overall uptrend. See, it's just been up. Any type of, oh wow, the end of the world, 4201. Oh snap! Anytime we get little pullbacks like that, and if you bought there and held it, whether it's an S&P mutual fund or an S&P index, ETF, well, then that's what happened, right? And even back here where we had the financial crisis, this was a really big deal. Oh my goodness, Brexit, the market's going down 2,800, 25, 35. What's going to happen? Boom, right? Oh my goodness, what's going to happen? Boom, right? Now, there are companies that went bankrupt, got kicked out of the index and things like that. But if you just look at this overall, right? If, loading up your 401k in an S&P index, or NASDAQ index, you probably, will benefit over time, right? So let's just drop down. Okay, well, Greg, let's day trade this thing, right? Right. So if the bias is up, but that you can short term, if you have these short-term options that expire in an hour, you might get screwed, right? You go long and you're holding on and it drops, and then the expiration, you're dead, right? But just look at the ranges, look what this thing is doing. And you can see that, boom, 1228 was support. And then the high was, we have a high of a 12,889.33. Oh, well, there you go. In it to win it. In it to win it. And we violate that low, bail, right? But we were in a nice, that's totally tradable, right? May not get to the old high, but if you got back to even these highs, with 1233, 12,335.05 to 12,78.99, that's all you need. With size, you can make that work, right? So bulls versus bears, I am short-term bullish the NASDAQ, and long-term for the next 10 years, I'm bullish. So don't, bears, short-term bears, you make money, right? But short-term, be a short-term bear, long-term bull. Okay, let's look at Bitcoin. BTC USD, Bitcoin. Look at that. Look at that. So this is the daily, and I'm going to go out to weekly. If you're enjoying this, let me know in the chat box if this is something that is helpful, is useful, right? So even though you might have bearish news short term, so look at that. We just broke this here, a pop from these lows, and we're looking for a rally, huge rally in Bitcoin up to the 6,500 area. The bottom's probably been put in at the 14,770 area. And we can see some, there's there's going to be some bumps along the way, just like the pilot says, there's turbulence, so strap, just go ahead and put your safety belts on and right? So we've got the old high, that's 4,900. We're at the 25,197. A break could take us higher to, I mean, we probably retrace all these old candles here and take us back into 47.25, right? We have a bullish engulfing. So this looks very good as long as we hold above 2108, 2080. There was some support. We can walk it down. Just walk it down. Look, break, flag, break. Walk it down. Walk it down to a 4 hour. Walk it down. Boom. New highs, right? People might look at a double top at 25.36, but the target would be 23.511, and that would be a load up point, even to the 200 simple moving average, right? We have an uptrend. Higher high. Now your structure people can come back out of the woods and go higher highs and higher lows with your British accent, your fake British accent, higher highs and higher lows, right? To make it sound official, but it only works part of the time, and this is the time it's going to work, right? And then we have an old high back here at 25,318. So we're heading right toward that as a magnet. And then we break that, and there's empty space to 2883, right? So bulls versus bears, Bitcoin. I am bullish Bitcoin. I'm also because now it's really interesting, because I know you probably heard me in the past say, well, when interest rates are going up and the dollar is going up, then there's been some type of a decoupling between Bitcoin and the US dollar that happened. Something has happened. I don't know what it is. I'll dig into it and let you guys know. Because in the past, people said the dollar is no good. Bitcoin is going to be the wave of the future. Cryptocurrencies, they have all these high deficits, all this stuff that's, people want, fast payments, and all these positive things are the reasons why to use Bitcoin, but it never panned out because it was still linked. You're trading dollars for Bitcoin. And if the dollar is going up in value, you rarely ever saw the dollar and Bitcoin move up at the same time. Seeing them both move up at the same time now is actually very concerning now, because now people are not going back and forth. They are holding on to Bitcoin, and they don't really care how much the dollar is going up. They're still pushing the price of Bitcoin up, which means that there's been some type of fundamental underlying change of the market where people are looking to Bitcoin in case of something happening, especially with the deficit. They said the U.S. government can run out of money by July. And so if we run out of money, we default, and they actually downgrade U.S. debt, well, what happens to the debt market? The debt market has to find some place to run to. And if they run into Bitcoin and run into crypto, that could be the catalyst that takes us above 100,000. I'm not a Bitcoin bull at all. You know me. I'm like, I'm old school. If you don't want your dollars, give them to me. I've got a bag full of them, right? Just give them to me, right? You don't like your US dollars, send them my way, right? But this crypto thing, this is a sea change. This is like when Neo was in the building and he sees a black cat and he sees another black cat. He goes, oh, deja vu. What's a deja vu? Something has changed in the matrix. Something has changed in this matrix where the dollar and Bitcoin are going up at the same time. That means, the rats jump out of the boat before it sinks, right? You always say the dogs start barking before there's an earthquake. So this could be like the canary in the coal mine, right? The guys that would take canaries in a coal mine, because if there's a bunch of poison gas starting to build up, the canary will die first. And if you see a dead canary, you should get the heck out of there, right? So this could be the canary in the coal mine that's like saying, oh, this is happening. The dollar may be in trouble, and people are buying the Bitcoin anyway, no matter if interest rates are going up. So be concerned. You heard it first here if you didn't hear it anywhere else. But and I am not a Bitcoin bull, but I am now. Right. And let's take a look at Ether. ETH, USD. I haven't looked at that since we're on this crypto kind of thing. And we can walk and do the same thing, guys. Walk it out to the weekly. I know it's boring, it's way out there, but you want to get that 50,000 foot view, and you can see that there's something going on, guys. This stuff is rallying with the dollar. That people don't care if the interest rates are going up, because you know what? Turkey's interest rate is 17%. Nobody wants the Turkish lira, you know? Russia has super high interest rates. Just because a country has super high interest rates doesn't, it usually means they're fighting inflation, the value of the currency, they have a good sovereign economy. But the other hand, if people lose confidence in the government, lose confidence in the economy, they have to offer higher and higher interest rates to attract capital, which is the other side of that, right? So this is another tool. You can go to the trader tools and go to central bank rates and take a look at some of the bank rates that are being offered. And you can see that, Canada's 4.5%, the euro 0.5%, Japan's negative interest rates. They're not going to pay you no money. In fact, they're going to charge you money for holding their money. Okay, that's telling you. But look, Turkey is 17.75%, right? Does that mean their economy is strong? No, they just had an earthquake, unfortunately. Be praying for those people. Syria and Turkey had a major earthquake. And plus their economy, they have high inflation, and it's an emerging market currency, but they have to raise their rates to 17.5% to get anyone interested to buy their currency. Here's the Czech Republic, 7%, Hungary, 13%, Russian Federation, 7.5%. So these countries have very high interest rates. 17.75. Mexico is like 11%, right? Hungary's 13%. So these countries have high interest rates, not because they have a strong economy, it's because they have to attract capital and they have runaway inflation. So we could have high interest rates, and it could be a sign not of strength but of weakness. And in that case, your cryptocurrency would be a place to run to. Okay, enough of that. Again, I am not a crypto bull by any extent of the imagination. However, I'm looking at the canary in the coal mine. This is rallying against it. In fact, I don't think we can compare them because the scale is different. But this is now if we break this area, this $1,000 level on the Ethereum seems to be it, and we could come back all the way up to 3,000, 35.26. So this is very interesting. Gold may be interesting too. Another interesting play is gold moving up. But you have to keep an eye on these alternative, moves. And so we see gold. Here's a weak gold. And we saw a rally from here up to the 1913 area, which is this old low here. And we rallied up, we turned from it, but we still have a nascent uptrend, higher highs and higher lows. We broke this trend line. We can't connect that wick there. I know I'm going kind of long, but this is about assets, protecting your assets. So your asset won't get et, Anyway, sorry about that little joke there. But this is gold, and you'll see buyers stepped in just before right there on the daily chart, right? So we see a break of 1855. We can see a move back up to the old high of 1953. Let's go down to a 4-hour chart, and you can see that we were lots of red candles and smaller body candles, and now we've got this green candle here, right? So we can kind of see that some buyers, they start nibbling, and boom, right? we're up against this trend line, which is not really drawn properly. Yeah, I mean, yeah, we really got a break of the trend line. And I'm gonna get rid of this is extension, but what you can do is like the time to mark trend lines actually go from like a swing point back and go like that, right? And let me just get rid of the settings and get rid of the extension. So we go, so you go like that and then extend it forward or something like that. So we actually broke this 4-hour trend line, right? Barely, but still buyers stepped in. This is the supply line, and this is our we don't have a demand line. What is our demand? Our demand comes up from, I mean, we can take demand from here. That's demand. Oh, right there, right? So that's our last low, right? And we got a triangle, we have a breakout, right? And so we break out in gold. So gold is rallying with the dollar also rallying as well. So, and then we look at oil as well, the US oil. And we have WTI also rallying as well, right? We have a higher low in oil on the 4-hour, but let's go back to the daily. Let's see, the daily was actually dropping and the weekly, right? So that's kind of interesting too, that the oil has dramatically sold off, and we were on this side of trend, and now we're on the other side of the trend line heading down with lower highs and lower lows, right? We can connect this one because this one has another candle on the other side, right? And we're closed back down inside of that. So this looks bearish on oil, right? So and that's an indication of the global growth. If the economy slows down, then you're not going to drive anywhere, right? It's just, and you don't need trucks to deliver stuff. And then copper, you go into copper, Dr. Copper. Copper is an indication of also global expansion. But this is interesting too. We have the oil is priced in US dollars, so maybe the dollar has some drag against the oil. But here's copper. Copper is going up, which shows that the economy, the global economy, is healthy when we have copper. I mean, we're off our highs, but copper is still, $4.25 a pound or something like that. That's our old high right there at the 5, over 5, and we're trending higher. So that's usually healthy. I don't trade this, but I just try to take a look at that. If it's going, when we have a recession and things like that, and then look, when we're afraid of things, boom, things are, copper drops. But then when things look up, copper starts to rise. So I just use it as more of a barometer of the health of the economy. Anyway, this video went a little long, and I just wanted to give you as much information to make sure that you are well informed about what's going on in the market. Again, we have our I want to remind you of our Las Vegas Forex Mansion Mastermind. Few seats left are still available. I look forward to meeting you in person and being able to meet with you and actually help you in your trading. We're going to be doing live trading. We're going to do mental mindset. We're going to have a special mindset coach that's going to be there. Adina Aaron is going to be also one of my top students. She's going to be actually sharing as well. And that's going to be wonderful being able to hear from her, from the luxurious life of a trader. Again, it's going to be fantastic. This is Las Vegas Pip and Run Forex Mansion Mind with me, Dr. McLeod. That's 3 days, April 3rd, 4th, and 5th. And we have a beautiful mansion that you're using. Not mine. It's a rented one, but that's going to be with lots. We're going to have food. We're going to have fun. We're going to have Top Golf. We're going to have catered meals. We're going to be going out to dinner, hanging out with each other, and learning about the Forex market. And you can benefit from my 30 years of experience. So take this opportunity, because when I fly to someone and work with them privately, I charge anywhere between $25,000 and $50,000. For just $5,000, you can work with me for 3 days. This is an opportunity of a lifetime. And you may not be available again. So, you may go on a vacation and come back broke if you go anywhere else. But if you come to Vegas and you come to this mastermind, you're going to learn something, learn tools that you can use, skills that pay the bills, and you can't lose with the stuff I use. This is Greg McLeod signing out from My Market Heat Map and the Elite Traders University. Make sure you come and visit the Elite Traders University at www.elitetradersuniversity.com. And come in, and there's some free resources. Let me show you what those free resources are that you can get access to, and find out more about what I do and how I help traders, all the right tools and training to start trading professionally in 90 days. We have our free masterclass that you can sign up for, our Income Boost Blueprint. You can just click that irritating pop-up there if you want to join and register for that masterclass. And if you're interested to find out more, to see if we're a good fit for each other, to see if mentorship is for you, then you can sign up for a free strategy class, a breakthrough strategy call with a member of my team, either myself or one of my team. You can book a call using the link that's provided, and what you'll be able to do is be able to secure your strategy session, a strategy session of our team. And in the strategy session, what you'll do is you'll get clear about where you are, where you want to go, what your goals are, what are your issues, what are your problems. Your wife doesn't want to hear about your trading. You've been promising her that you're gonna make her $1 million and have her live in a lap of luxury. Just to be patient, but she's been patient with you for years, okay? And you're getting older. You've drained all your money, and it's about time you stop doing that and actually make good on your promise to your wife and to your kids, and actually take the shortcut. And the shortcut is to stop doing the DIY thing, but to actually stand on the shoulders of professionals who've gone before you and have had success, and are willing to share our information with you if you're willing to invest in yourself. If you don't think your dreams are worth the investment, if you don't think that you're worth the investment, then maybe you should find another thing to do. And maybe trading isn't for you, because whether it's Tiger Woods or Bill Gates or whoever, they all invested in mentors who helped them. They didn't do it on their own. The self-made man is a total myth. We all need each other. I have mentors. I still pay for mentors and mentorship. Even at my level, and my mentors have mentors. So, and you think you can do it on yourself with just some YouTube videos and a Discord group? Probably not going to happen. Okay, what are the odds of that happening? Okay, but you can sign up for a free breakthrough strategy call with a member of my team. You can choose a time, choose a date, click the button. Make sure you show up. Make sure you have a note, paper, and pen. You're in a quiet area. You're on a computer with a big screen so you can see the things we're sharing with you, and be ready to learn and to actually get honest about where you are in your trading, so we can create a plan for you to move forward. If that plan means moving with us, then we'll show you how to do that if you ask. If you want to do it on your own after going through getting clear about what you want to do, then that's fine too as well. The call is free. The meeting is free. We just ask that you let us know that you are going to, show up. If not, we'll cancel it. And because we want to leave spots open for people who are serious about changing their life, change their trading, change your life, and live the elite life with Elite Traders University, helping them every step of the way. Yeah, my name is Greg McLeod. I want to thank you so much for being part of this meeting. Make sure you put your comments below. Make sure you share, like, subscribe, do all those cool things to spread the word if you found this information useful. Okay. Like I said, I'm a Wall Street insider. I've been doing this for close to 30 years. I work for one of the largest Forex broker dealers in the world. I work for one of the largest banks in the world. And so I used to trade against you. Now I trade with you. Just take my hand and let's see how far we can go. This is Greg McLeod, Peace and Pips, signing out. Cheers. Bye-bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!